Welcome back everybody to a new day in a new video. Again we're in the red, so let's dive straight into the charts to see what key levels are to look out for. We are starting of course on the BTC USD pair. We are just grinding lower and lower and lower. It looks worse by the day, to be honest. I said a few times that I don't mind if we break this support right here. Let me draw that for you. There was the support line right here. I actually wanted to see like a wick down and then going back up again. We are now 3 days further. So far we have not seen that, and the longer we stay here, the more worried I'm getting, because if we are really trading lower at certain levels, then it also takes more time for us to go up. For example, we have seen that here. This was actually also multiple days and not really a wick down. By the way, let's just check right away how long that was. Yeah, that was 10 days. So it doesn't mean that the bull market is over and we're only going down. It just means that it takes then a little bit more time. We are holding right now the approximately 42,000 level. That has been significant support and resistance for more than a year. I mean, look at this. That is crazy. Here we broke through it, but here it was the support that broke. Here was a bit of a resistance. Here's been multiple times support and resistance. It is absolutely crazy, and now we're trading at it. The next level, if we would not be able to hold this, because we actually already dipped down, which is not a problem, but you actually want to have a closure above that level. The next one will be among the 40,000. Also, that has been support and resistance for an extensive period of time, and that we might revisit that level. On the daily, we are now printing 1, 2, 3, 4, 5, 6 consecutive red days. So yeah, kind of a bounce is a little bit due right now. It just doesn't seem to end, but from a possibility perspective, then you'd say there is the price is due for a bounce. Not oversold yet, absolutely not. So we still have room to go down. Also, the MACD crossed bearish again, and of course we are underneath the ribbons. Talking about the ribbons, on the weekly we are now underneath the ribbons, and quite a lot as well. So actually you want to see a pump up, but today's Friday, so a lot of traders take liquidity out of the market for the weekend. The weekend pumps are usually not as strong as during the week, so I prefer pumps during the week than in the weekend, because sometimes then you have a pump in the weekend and then kind of after the week after, when the market's open, you're gonna close in that gap again that then occurred on the futures market. But yeah, so far it doesn't look very good actually. A wick down below the ribbons isn't bad, but if we really close down, that is pretty much of a bearish signal. If we zoom in, also yesterday I said we are usually trading at and around 9 EMA. That has been respected quite a lot, because we did some sideways action, kind of tested it, and right away we're going down. So it's the price is just so bearish, so slow, and we're just grinding lower. I mean, look at these wicks down. They are just tremendously compared to the tiny wicks up. So it takes us so much energy, so much fuel to get a bit of a pump, and the dumps are just following right after quite fast, quite heavily. So price action is pretty bearish. We're kind of just grinding also lower here on the 4 hourly. This can continue for quite a long time, so be very careful with that. You could try to scalp here and there to maybe take a small short position. I will try to do that during the day, but the price have been very wicky. Let me take away the ribbon so that it becomes a little bit more clear. If we zoom in here on the hourly chart, and we're just looking at the wicks, I mean, this wick was 2%. Let me see, this wick here down was 3%. Later on we're going to do the same on Ethereum. You will see that the wicks are even bigger, and this was 4%. So yeah, you know, if you one hour going up, the other hour going down, I can imagine that that can be a little bit tricky. If you know what you're doing, then you love these kinds of periods, and this is the absolute accumulation phase so far. So we are staying very cautious. Like I said, the 42 is now the level to hold. If not, then 40,000, and underneath 40,000, I have to be honest, I am becoming pretty bearish. So let's see how that goes. Let's quickly head over to Ethereum, because there we kind of have the same kind of story. We are right now Testing support 3200. We're holding it. We dipped down below. That is completely fine, but actually you want to see a close above or at the support here on the daily. So far so good, but I would not be surprised if we get another wick down, and that will be then among the 2900. That also has been support and resistance for such a long time. So I'm now taking the circles on both levels. So this was the 2900, and just above then is the 3200. The gap between these two levels ain't that big, because if we are zooming in here, then we can see that it's only a 4 or 7% extra drop. So yeah, for Ethereum we have seen that actually multiple times over and over again. Matter of fact, this drop already did it. Oh, look at that, 13%, and this was 9%. So in just two 4-hour candles that can be done. So be careful. I had a long position open. That one got closed in a profit, unfortunately. I will tell you completely transparent what happened. Jumped into a trade around here, went up a little bit, and this was also on the 4-hourly, and I thought we would go a little bit further, so I kind of missed my exit point, and then we went down. I also opened up a short last night and closed that right away in a profit, but also here it was just very, very wicky. Let me also here close the EMA ribbons, then you can see what I mean. Let's pull a few of those lines. This one was 4%, this one right here more than 4%, then the next hour right away pumping up almost 4%, so it's very wicky up and down, and that can make stuff very confusing. RSI recovering here a little bit, so we would make room for another dump. Who knows, maybe Friday afternoon. It is right now in the morning here in Mexico, so it's also still morning in the United States, but in Europe it's already getting a little bit darker right now. I think there's like 6 or 7 in the evening. Asian is asleep, so yeah, who knows, we might be tricked into another push down. So 3200 and then 2900 are the key levels. If we are breaking up, of course, then 3400, this level right here, is then the next level I'm looking at. That was actually the bottom of the dump that we had here in December. So yeah, I think that's around it. Also here again, guys, if you are taking position, stick to the charts. Don't go for a home run. Take those small profits, few percent in and out, because like I said, it's been very, very wicky. There will be a turnaround. So far we haven't seen it yet. The trend is your friend until the end. So yeah, it will take some more time, but time wise we are now, I think, almost 2 months in a correction mode. If we're taking the complete period, look at that, 58 days. Is that a coincidence? Nope, it is not, because if we are taking here, look at that, 68, so we're 10 days away from the correction. This one was much shorter from what we had previously. I do not think that we will go maybe as long as this one. I mean, actually the next another 10 days, yeah, could be, but also here, yeah, it concerns me that this actually takes quite some time to go lower, lower, lower. I just want to see that big wick up so that we can consolidate and then go higher. So far that hasn't happened yet. So yeah, let's see how that turns out. Just be very careful. The market will return, we will go higher, and then you don't want to be standing on the sidelines where your account is being blown up. So be very, very careful. Okay guys, that was it for today. Please do me a favor, hit that like button, subscribe, share this video with your friends, and I'll see you guys in the next one. Thank you so much. Bye bye.